Hi everyone, welcome back. I hope you guys have been doing great and not holding back in this market. There is money to be made everywhere, and well, things are just getting started for us. It absolutely is time to lock in and finish the year strong. I really cannot believe what I'm saying, but time has really flown by. Yet here we are, ready to make the best out of it. I have for you another gem that has been severely sold off, but has been showing signs of life now and has been on an uptrend for some time. And after doing some digging, I'm starting to see why. The chart is explosive and they've been working behind the scenes to make a strong comeback. Before we even get into the fundamentals, I want to stop for a second and talk about something I came across that really caught my attention. Earlier this year, a company quietly mentioned something in one of their filings that didn't make headlines, but it should have. They talked about adopting a new Treasury strategy to strengthen their position and give themselves more flexibility for future growth or potential acquisitions. Now, if you've been following the market lately, you already know that word Treasury has been a major trigger across small caps. Every time a company mentions strategic treasury management or even hints at reallocation of capital, the market goes crazy trying to figure out what's behind it. It's been one of the hottest themes, especially when it connects to bigger plays like restructuring, yield management, or strategic partnerships. But what stood out to me here is that this wasn't a press release, this was buried in a filing, sitting there quietly. And that's the type of thing you only find if you're really digging. And when a company makes moves like this quietly, it usually means they are positioning themselves ahead of something bigger. So whether that's a merger, expansion, or corporate level move, it's one of those subtle clues that can end up being the foundation of a future catalyst that the broader market has not noticed yet. And we've seen this time and time again. We're talking about VRME, who posted a surprisingly strong 2024 report back in March. The revenue came in at $24.2 million, which was an increase from the prior year. They held a 36% gross margin, impressive for a logistics driven business, and closed the year with over $6 million in cash. The balance sheet shows $17.2 million in total assets against just $2.7 million in liabilities, leaving roughly $14 million in shareholder equity. And that's with a market cap sitting around only $13 million right now. The company is literally trading below its own net asset value. That's a level of undervaluation you rarely see with a company that's still active, expanding, and cash positive. VRME's logistic arm, Perishable Global, handles shipping intelligence for perishable and temperature-sensitive products. Think fresh seafood, flowers, meats, or biotech shipments that need to arrive on time and at the right temperature. For years, the business ran on FedEx delivery network, but that came with limits. FedEx was restrictive in their integrations, and it left VRME fully dependent on a single carrier. In July 2025, VRME locked in a 3-year strategic partnership with UPS, signing both a digital channel program agreement and a partner API access management. By September, FedEx approved their support and VRME seamlessly transitioned to UPS overnight with not a single disruption to client shipments or services. And that kind of operational pivot under pressure is honestly rare for a penny stock company. UPS isn't just a replacement though, it's a better structural match for VRME's long-term model. UPS gave them full API access, enabling real-time tracking, proactive updates, and automation that FedEx never offered. VRME now has access to UPS promotional rates, letting them widen profit margins between what clients pay and what UPS charges. And UPS has been aggressively expanding partnerships with third-party logistic tech providers, which aligns directly with Periship's model. UPS also gives them more flexibility in branding and service customization, allowing VRME to market their proactive system under their own name. The FedEx relationship capped their potential, but the UPS partnership unlocks it with better margins, deeper integration, and room to scale. This deal positions them for a stronger long-term growth. And between December of 2024 In March of this year, insiders went on a buying spree. The CEO made multiple open market purchases, all in the 60 to 70 cent range. And we also had board members who added nearly $10,000 worth of shares. Now, this isn't a crazy amount, but they're only buying for one reason, and that's more than likely because they expect the business to improve and the share price to rise. And seeing both the CEO and a director load up at those levels sends a clear signal of confidence. Now let's get into the chart because this setup is starting to line up technically in all the right ways. VRME has been on a steady uptrend, building a clean series of higher lows while reclaiming the 20 and 50-day moving averages. The structure is tightening in momentum. Indicators are waking up. The MACD is crossing bullish, with the MACD line curling above the signal for the first time in months, showing momentum shifting back to buyers. At the same time, the 50-day moving average is curling around or towards the 200-day, setting up a golden cross, which is one of the strongest technical confirmations of a trend reversal. And the RSI has pushed back above the midline, confirming strength without overbought conditions. And that's exactly what you want before a potential leg up. And now let's talk about the price levels here. We have a key breakout area of $1.35. This is the first retest zone where momentum has paused before, and a major breakout level at 150. A clean break here on volume could trigger an acceleration move, pulling it into a fast run zone. And the realistic target range with volume here is between $3 and $4, which lines up perfectly with the next major liquidity shelf from earlier trading history. So with a 10.4 million float, incoming MACD cross, and an imminent golden cross, this chart has all the ingredients for a technical momentum rally. If volume builds, this could easily turn into one of those explosive small cap reversals we've seen time and time again. This company has quietly strengthened every layer of its business with solid financials, insider confidence, a stronger carrier partnership with UPS, and a chart set up flashing multiple bullish confirmations. That's a combination that can send a stock soaring once the market takes notice. I'm ending the video here, guys, but let me know your thoughts down below in the comments, and let's continue baking together.